starting with Volkswagen, which is a German car manufacturer headquartered in Wolfsburg, Germany.
Right, it's the world's second largest, or maybe sometimes the largest manufacturer of cars. And I'm talking here about 10 million units a year made globally. It's always between it and Toyota as to who's in the lead. So this is an interesting company. We know about the Dieselgate saga.
And Volkswagen established in 1937, so we're steeped in history here. The euro, the market cap sitting at 64.6 billion euros and trading on a PE of 8, dividend yield of 1.6%. Let's get the share price graph up, Chris, and there we go.
Guess what happened in the middle there?
Yeah,
that's the Dieselgate
the
thing
diesel
I'm talking
issue,
about.
absolutely. I thought you were coming
Sorry,
to
I
the
thought
fore
that was a question.
with new news.
I thought that was a question that sort of answered itself.
But you know, it's not just diesel, Paul. They've got a problem now with Audi, one of their subsidiaries, on the petrol front as well, and that's taking a long time to resolve.
Oh, really? An emissions problem?
Yes, emissions problem with on petrol as well. They've come to an agreement with the Americans. I think they're going to pay $22 billion equivalent. There's another 1.6 billion in Canada. I mean, this just isn't going to go away. You see, in the UK, for example, they're now going to be in the relatively near future. I wouldn't say they're going to be banning diesel cars, but they're making it awfully difficult. It basically means that you don't want to have a diesel car in Britain anymore because it's going to be so expensive in terms of the tax.
What does it mean, though, from an investment case perspective, if you've got these continued issues that will plague the company?
I think VW is something you've probably got to avoid for the time being until these have played out and they're out of the way. And that could take quite some time. These legal things do tend to take a long time to resolve.
Do you differ, Paul, on this?
Well, let's put the share chart up again, because what happens and why they've got a market cap of 60 billion euros and not 120 billion euros is the share price has halved. So that loss of value is reflected in the aggregate fines and the potential for market share losses. It is a concern, and you know, we've seen this with other examples like, you know, British Petroleum, which had the blow up in the Gulf of Mexico, often the fines and the settlements and the other dramas that carry on. The issue really, though, is that what I've read about Volkswagen is that the sales of vehicles have not been bad. So notwithstanding the supposed, you know, impact on the brand,
the top line is still growing healthily.
Customers still remain fairly loyal, and I don't know, Chris, I think if you've got that manufacturing machine, they could repurpose that to be more petrol-oriented and, in time, electric vehicle-oriented.
Well, you've hit on a very interesting point. If you look at what Volvo is doing, for example, what even Aston Martin is doing, you know, they're actually saying, you know, in the next 10 years, at least 50% of their output, or in Volvo, in fact, virtually everything in 2 years' time is going to be electric. I haven't seen the same commitment from VW.
Yeah, you're right. You're right.
Can we call this? You're not hot on it?
Not hot on it,
I'm assuming. No. And Paul, you are going to swing it the other way, sir.
Why not? Yes. I think the damage is not as deep-seated as people think. And I think they can continue to do good sales globally, not just in Europe. So I'm going to go hot on this one.